Welcome back to Explain the Charts. Today, April 28th, 2025, we're analyzing Intel, INTC, looking at the news and the charts to figure out where the stock might be headed. Recent news indicates Intel is facing headwinds, reporting a weak forecast amid ongoing trade tensions. CEO Lip-Bu is trying to address internal issues, including job cuts. The stock has been sliding and employees are worried about the turnaround prospects. Let's start by looking at the daily chart to get an overview. Okay, on the daily chart, we see a significant downtrend over the past year. We see the stock has dropped from a high of around $48 in December 2023 to its current price range around $20. The overall trend is clearly bearish, and the recent earnings report seems to have exacerbated the decline. Let's zoom in on the more recent candles to look for shorter-term trends. Looking at the daily chart for the last few months, since around February 2025, we see a few attempts to rally, but none of them have sustained. The stock faced a significant drop in early August 2024, plummeting to around $21.50 and hasn't recovered since. We then saw another big drop in April 2025 after an earnings report. This mirrors the news about a disappointing forecast and job cuts. There's a potential resistance level around $22 to $23, which the stock has struggled to break above. On the downside, a key support level seems to be around $18, which it tested in early April 2025. Breaking below the support could lead to further declines. Now, let's switch to the 1-hour chart for a closer look at recent price action. Here, we can see that the intraday volatility has increased since the recent earnings news. Looking at the 1-hour candles since about April 7th, we can see that the stock had a large crash from 19 to 18 within one day. This was followed by a larger jump up to 21, then another drop back down to around 18 after the earnings reports. It is possible that there may be some day trading or swing trading opportunities, but the stock has been too volatile to have any long-term conviction yet. Let's narrow down to a specific region, starting from April 23rd on the 15-minute chart. We'll do this to see if we can identify any patterns in the price action near today's levels. On April 24th, the price jumped on higher volume, showing the effect of the news. Intel traded around 21.49 on April 24th, then crashed to 20.05 on April 25th. The pre-market price is 20.01 today, a decrease of 0.04, showing the current trend is still bearish. Let's zoom out and look at all the 15-minute data to confirm this. As we can see, the trend has been negative for the past week. The stock traded around 20.7 yesterday and has crashed to around 20.05 today, and it seems likely to go lower. It looks like the $20 mark is going to be the next big test for Intel. So, what's the verdict? Based on the news and the charts, the short-term outlook for Intel appears bearish. The long-term future relies heavily on Intel's ability to execute its turnaround plan. Key price levels to watch are the resistance around $22 to $23 and the support around $17.50. A break above $23 could signal a potential shift, while a drop below $17.50 could trigger further selling. Keep an eye on news regarding trade tensions and the CHIPS Act, as these external factors can significantly impact Intel's performance. It is unlikely, given the current news, that the price will climb significantly above $25 in the near future unless the CEO resolves their current struggles. The stock might drop below $17 if there are more bad earnings reports. Remember to do your own research before making any investment decisions. Thanks for watching, and don't forget to like and subscribe to Explain the Charts for more in-depth stock analysis.